The dollar is crushing. Over the past few weeks, there have been numerous mainstream and social media headlines announcing the dollar dominance is crushing. However, similar headlines have appeared since the 1980s, and the dollar is yet to lose value. While the US dollar technically could collapse, its support from the world's largest economy, as well as its status as the world's reserve currency, make this highly unlikely. Today, we will like this highly discussed topic of the dollar being knocked out. First, let's find out if the US dollar will ever lose the world dominance. Is it possible for the US dollar to crush? There are some plausible scenarios that could result in a sudden dollar crisis. The most plausible scenario is a dual threat of high inflation and high debt, in which rising consumer prices force the Fed to raise interest rates sharply. Because much of the national debt is composed of relatively short-term instruments, a rate increase would function similarly to an adjustable rate mortgage after the teaser period expired. If the US government is unable to meet its interest payments, foreign creditors may dump the dollar, triggering a collapse. Users may abandon the dollar if the United States enters a deep recession or depression without dragging the rest of the world with it. Another possibility would be for a major power such as China or a post-EU Germany to reintroduce a commodity-based standard and monopolize the reserve currency space. Even in these scenarios, however, it is not certain that the dollar will collapse. The dollar's demise remains highly unlikely. Only the prospect of higher inflation appears reasonable among the preconditions required to force a collapse. Foreign exporters such as China and Japan do not want the dollar to fall because the US is such an important customer. Even if the US had to renegotiate or default on some debt obligations, there is little evidence that the rest of the world would let the dollar fall and risk contagion. The dollar is crushing. The collapse of the US dollar and its replacement as the unit of account for global trade would be the most serious consequence. It is widely used in global finance and trade. Most Americans are probably unaware of the economic and political power that comes with being the world's unit of account daily. Currently, more than half of global trade, from oil and gold to automobiles and smartphones, is conducted in US dollars, with the euro accounting for around 30% and all other currencies accounting for the remainder. Because of this dominance, the United States is the only country on the planet that can pay its foreign debt in its own currency. This gives the United States government and American businesses enormous leeway in international trade and finance. No matter how much debt the US government owes foreign investors, it can simply print the money to pay them back, though this may not be prudent for economic reasons. To pay their foreign debt, other countries must purchase either the dollar or the euro. And the only way they can achieve this is to either export more than they import or borrow more dollars or euros on the international market. The United States is not subject to such constraints and can run large trade deficits, that is, import more than it exports, for decades without suffering the same consequences. Because of the dollar's dominance, American companies are not as vulnerable to exchange rate risk as their foreign competitors. Changes in the relative value of currencies can have an impact on a company's profitability. Because international trade is generally denominated in dollars, US companies can buy and sell in their own currency, which their foreign competitors cannot. As simple as this may sound, it provides American businesses with a significant competitive advantage. If Republicans force the United States into default, the dollar will most likely lose its status as the international unit of account, forcing the government and businesses to pay their international bills in another currency. Also, following sanctions imposed on Russia for its invasion of Ukraine, combined with Washington's increasingly confrontational approach to China, have created a perfect storm in which both Russia and China are accelerating efforts to diversify away from the dollar. Their central banks are keeping less of their reserves in dollars, and most trade between them is being settled in the yuan. They are also, as Putin noted, making efforts to get other countries to follow suit. Bottom line, currency collapses can and do occur, but it is not minor occurrence. When a currency collapses, it is the result of a major economic or political event in a country that has a significant impact on its citizens. It's not a likely outcome in most countries around the world, and it's especially unlikely in the United States. This is due to the United States' status as the world's reserve currency. So while the US dollar technically could collapse, the chances of this happening anytime soon are extremely remote. Currency collapses can have an impact on investors' portfolios if they invest globally. The best way to protect against this is to diversify sufficiently. The spread of assets across industries and currencies reduces the potential impact of a currency collapse on a portfolio. That's all for today. Let us know in the comments what are the potential long-term consequences of the dollar's decline and what can be done to address this issue. See you in the next video. Tell us by way of subscribing if our video gave you some new insights on the dollar. Turn on the notification button to get notified with new video updates. Stay safe.